Okay.
Hi guys. Um, can you confirm if you can hear me clearly? You can just drop a message in the chat box just to be sure that you can hear me and we can kickstart. Okay, okay. I see you said you can hear me. So yeah, good morning guys. Today I'm very sure you have seen the topic of what we are going to be talking about. By the way, I'm trying to pronounce. Oh, AKP. Okay. Big man, what's up? Um, yeah, please drop a. Yeah, yeah, yeah. Please drop a notification on the WhatsApp so that the others will know we have started. So let me just move over to my trading view and we start talking about um, what we have to talk about today, right? Basically, I want us to talk about the very, very important features of every trade that you want to take. What do you want to see in a trade before you can be confident to say, I want to enter this trade, right? That's what we're going to be looking at. Definitely, this class is, it's suitable for anybody trading just any strategy. Yeah, whether you trade supply and demand, you trade smart money concepts like me, you trade HORC, you trade support and resistance, whatever you can think of, BTMM, key levels, ICT concepts, silver bullets, and all of these things, whether you trade DCL, whatever you can think of, any model at all. Okay, I want to believe that from our own personal studies as traders, you can even come up with your own model. Yeah, and it is very, very possible for you to even tell yourself, okay, that strategy that I learned from a mentor, I'm not even going to be trading it anymore. I discovered a model while I was trading, and that is the model you want to sit with. Yeah, so that in itself is enough. So whatever model, whatever strategy you trade, go ahead, to use it. But we're going to be looking at the very important features that any trade must have, no matter the strategy. Any trade must have. And the moment you have these things present in a trade, then it makes sense. You can confidently take the trade. And when I say you can confidently take the trade, what you already know about forex is the fact that that does not necessarily mean that this trade must or will 100% play out. However, you can be confident that you have a good setup. Yeah, you can be confident that you have a good setup. And of course, as a forex trader, you know that all that you really want to concern yourself with. I'm trying to share the link of this session so that more people can also see it. Right? Join me on a live session. Yeah. So, your job as a forex trader, by now everybody must know that, except you are just starting out in forex. Your job as a forex trader is to, how do I put it? Is to ensure that every trade you take is a good trade. That is, every trade you take is a solid trade. That really is what matters. And you don't fixate yourself on will he win, will he not win. That is not your job, right? Your own job is to ensure that every trade you take is a solid one. And so long it's a solid trade, you strike. What matters now is that your risk reward and your risk management eventually puts you in solid profit. I had a class with my mentees this week and we're talking about risk management. And throughout this week, we've been practicalizing it. Yeah, we've been seeing how that the wins will come, the losses will come. However, with a solid strategy and a solid risk reward. What you see on my screen right now is a Euro USD trade that I took yesterday, and you can see the two lines that are supposed to mark my actual entry. Yeah, and you can see that price did not violate that area. So the only reason I lost that particular trade is I tried to get into the trade on a confirmation, and quite unfortunate, price still manipulated that confirmation before now eventually giving me the sell. And yeah, this is one of the things that happens to you as a forex trader. It happens, it's part of the business. So this particular trade was lost. Another US 30 trade was lost. However, there was a GBP JPY that had given me a 1 to 12 risk to reward this same week. So even if I lose 5 trades that week and I win just one, that gave me 1 to 12 risk to reward. With proper risk management, I'm still in a massive profit of 7 RR. So whether I'm risking 1% of my capital per trade, or I'm risking 2%, or I'm risking 5%, or I'm risking 10%, multiply my 7 RR by whatever percentage, and that tells you the profit I'm closing in for this week. So this is the real game of forex trading. It's not a game where you are trying to make sure that every trade wins. You don't determine what trade is going to win and what trade is not going to win. You don't get to determine that. Yeah. So class has started. Okay. So like I said, you don't get to determine what trade plays out and what trade does not play out. Your job is to get a good setup and strike. So let me see. Um please just hold on. I'm trying to change a particular any setting I need to change on the live session, and then uh, we'll move over to trading view. Okay, let's get over to trading view. So yeah, here we are on trading view, and if you look well, this is the actual entry I had for the trade here to here, which for those of you who see my trades live, you know that I usually will leave a little space at the top here because of spread, no matter how small. Usually at this point, I would also leave a little space, also because of spread. And if you look at that, I'm just going to move it over, and you realize that that is a trade that has played out and given about 11.88 risk to reward. But as I told you before, I didn't enter that trade at that point. When price got into the entry here and gave me this drop, yeah. So I took this for my break of structure, or whatever you call a change of character in that sense, and I tried to enter somewhere around here, which quite unfortunately price manipulated it before the main sell now happened. I had to come back to that, and that's another lesson I want you guys to learn early enough. That when you take a loss, you don't just tell yourself, "Well, that market, the market is just being the market." Well, sometimes you may not be able to spot it, but many times you go back to the chart, you can spot what you did wrong, right? And from what I see here, the only thing that I did not do right on this trade is waiting for time. So the move started at the right 2:30 p.m., which is which is your London Open. As you can see, the move started within this window of, I said London, sorry, US, New York. The actual move started at New York Open, which if you have been trading for a while, I expect you know that this is one of the time when The main manipulation for the day will happen, and then the main move for the day should start around this window. That is something around 1 p.m. till around 3 p.m. usually. You can extend it to say 1 p.m. to 4 p.m. That's around that time. That's when the main move will start. So the only error in this setup that I had was that I was getting into trade around 11:50, which was not following time and price. If you don't believe what I've said, we can look into some other days together and you realize that around that time is when major moves will start. Look at this move. That's the day before that day. This is your London Open, and as you can see, I mean, you New York Open, and as you can see, that is when the main move started. There are many secrets to learn, and these are some of the things that we focus on in my mentorship. You see, the main move for the day usually will start around that time. As you can also see, this very solid move started at, this is London Open. I want to believe you already know how sessions work in the forex market, how that there are majorly, three sessions: your Asian session, New York session, and not London session. But we go into the details of sessions, and earlier this week I was able to expose to my students how that there are actually not three sessions, but about 5 to 6 of them. There is the Tokyo session, there is the Sydney session, there is the Frankfurt session, and I showed them where to check these sessions and the specific time where all of these sessions start and all of that. But that is not the focus here. I'm just showing you that one of the key things you want to see in a trade before you enter it, right, is also time and price. So this setup that I had was perfect. The only thing that went wrong was that I did not consider my time and price. Actually, I was not very concentrated around that period. Else, I would have looked into my time and price and just waited for what is it called, New York Open, before I took the trade, and that would have given me the exact thing that I was waiting for, and that would have been entering somewhere here. And right now, we're looking at a solid 1 to 12 together. The market is not rocket science. That's the truth. The market is not rocket science. It is not rocket science. It's no magic. It is it is you understanding what you are doing. All right, that's that for Euro USD. This is GBP JPY, and I also got into this. I had this analysis. In fact, one of my students was telling us in our group that while I was teaching and she saw this particular setup I had, that she took the screenshot waiting to see whether it was going to play out or not. Well, the reality is the market is the market. If you know how to trade, you know how to trade. Now let's also look at what time did this start. I've not even checked, but let's see. Let's see what time did it play out. Okay, so this trade entered into our entry at London Open. London Open. Can you see that? This is London Open. And that is when the trade entered into the entry. And that is another confluence for you to know that this trade is going to play out sharp. You can see it already. London Open, and we have a move. Yeah, that was London Open. And even the continuation happened at New York Open, which I'm sure you can see here. This is where you could have taken an additional entry. Happened at New York Open as well. You see, timing is very important in this market. So let's just get into what we have to discuss today, and we would, things up as quick as we can. So I said compulsory features of every good trade. what makes a good trade? Let's just put it like that. What makes a good trade? Yeah. So we're looking together at what makes a good trade. Like I told you guys, whatever strategy you take is you trade is fine. Support and resistance, price action, candlestick, um, price action patterns. Whether you trade, head and shoulder pattern, rising wedge, and all of those things. Whether you trade smart money, demand and supply, ICT, rally based rally, you trade with an indicator, harmonic patterns, Wyckoff, whatever you trade, you would realize that there are still things that makes a good trade. When they are present, you have a solid trade. And like I said, that does not necessarily mean you must play out, but you have a solid trade. And it's your job to take only solid trades as a forex trader. All right. So you realize that these things are usually present in every good trade that you take. The first amongst them, yeah, is definitely your directional bias. Number one, a solid trade must consider where is price going to. Yeah. So if any solid trade you are going to take must consider where is price going to. And this is what you want to know by analyzing um sorry and this is what you want to answer this question by analyzing structure. Yeah. For support and resistance, maybe you have another way to analyze direction. You expect that if price hits a support, it is meant to bounce up. That is how you answer the question of where is price going to. If price hits a resistance level, you expect that it is time to drop. That is how you answer the question of where is price heading to. So that is the number one thing that you want to analyze before you say that you want to take a trade. So what I'm saying in essence is you don't just open chart and the next thing you just do is take out one order block and you say I want to sell from there, I want to buy from there. There are myriads, millions of order blocks in the market. Many of them are getting violated as price hits them. Some of them small reaction, it takes it out. Some of them it doesn't even have any reaction at all. Just get there and wipe it out without stress. So you're going to have a lot of order blocks in the market, plenty of them. So you cannot just open your chart, take another block and say the next thing is I want to buy here or I want to sell here. There's no such thing. You have to first look at where is price going to. All right, where is price going to? And for a person like me, one of the key things I do for that is I make my analysis of direction. And how do I do that? Well, this is not going to be a full class on how I trade, definitely. Certainly, basic structure that clearly price is dropping. I think that is very clear enough. Price is dropping. Yeah, so I know that if you look at it well, for me, I know that this is my range. There is such a thing as range that I trade, and I'm looking for where to sell in the premium zone, which is the half that is on top. I'm looking for, if I must, I'm looking for where to buy in the discount zone. That is the half that is below. The first half is up, the second half is down. So this is my range, and based on something that I studied and observed in the market recently, which I call NLE. I call it neckline entry. Right, I realized that somewhere around here is where I should be looking out to continue selling. And yeah, I was able to. So that is basically for me how I choose my directional bias. Definitely, there are many things to consider in your analysis. Yeah, but that's the basic explanation of how I knew that right now the next thing is for us to be selling. Yeah, for some other people who trade um, what is it called, key levels, something like this is what they will be marking out. So they are waiting for price to hit this line and then they are thinking of selling. They either do that or maybe they are going to be looking at it somewhere around here. It all depends on your own strategy. But the point is, for me, my directional bias is that simple. All right. So I just take my two lines for my entry. So the moment you answer the question of where is price going to, another thing that you must have, you must see in a setup before you consider it solid enough is what I call incentive. Right? I call it incentive, and there are two incentives we are going to be looking at. I call it price incentive, and this is very, very important in my opinion. Now, by general English language, what is incentive? Incentive means that something that you do or something that you give somebody to what's that word? To motivate them to do a thing. Yeah. So how do I explain it? A promo is an incentive. So Indomie wakes up one morning and they decide that they want to start doing buy one get one free, which means that if you get one carton of noodle, we are going to give you one full carton extra. So if you pay for one carton, you get two cartons. They are incentivizing you to come and buy noodles. If they start doing that now, I promise you, many of you who don't even like noodles or have not eaten noodles in the last 3 years, I mean, you feel like the economy is not smiling, noodle does not fill my tummy, I cannot be wasting my money on that funny stuff. That food is for babies, and all that. And because of that, you don't really eat noodles. If noodles start doing buy one, get one free, especially if it's carton, buy one carton and we'll give you one extra carton for free. Trust me, everybody here will start buying a carton of noodles. Why? They have created something that motivates you to do it. That is an incentive. Now, I use that same idea in my trading. Your leg, please. I use that same idea in my trading, yeah, and I look for incentives in two ways. Number one, the incentive for price to come to your entry. All right. Best incentive is something that can make price come to your entry. Incentive. The first one is why should price come to your entry? Incentive for entry. And the second will be entry for target. Incentive for target. So for me, the first thing I want to look out for is why should price come to your entry? That is an incentive. So there has to be an incentive, something that is drawing price to your entry. Now, if you look at the setup well, I don't know if you notice, but all of these are some sort of liquidity build-up. Well, at the end of the day, liquidity is always the incentive for me. Always. You see, price is building up liquidity here, and you must have learned as a forex trader that what moves the market is nothing but liquidity. All that price does is go to take one liquidity and turns back to take another liquidity. That's all it does. I'm going to repeat that. All that price does is go to one liquidity, after you take it out, turn back and go for another liquidity. So if you don't understand that, I have a video on this channel where I was explaining how price moves from external range to liquidity to internal range liquidity. From internal, it goes back to external. From external, it goes back to internal. And you would see this is exactly what happened in this particular trade. So price was somewhere around here. Yeah, something like price was somewhere around here when I analyzed this trade. And then over time, I saw it was building this liquidity, which was giving me confidence. Because if there's liquidity here, you can be sure price will come to take that liquidity. So that is the incentive for price to come to my entry. There is something that is motivating price to come towards where I want to enter. First thing is this liquidity build-up. Second thing is this fair value gap. I don't know if you know how to identify a fair value gap, but definitely that's a fair value gap. All right? Definitely that's a fair value gap. If you study how price moves, again, price moves from liquidity to liquidity. All right? Again, price moves from liquidity to liquidity. And fair value gap is a liquidity that price would usually want to take. I'm trying to resend the link to the group so that others would also join in. So I was saying that fair value gap is another liquidity that usually would draw price. So if you understand what I'm telling you is when you have an analysis, there should be liquidity for price to come and take very close to your entry. This is the reason why many people have an analysis and they miss entries because there's no incentive for price to come to your entry. It's important. So fair value gap is a good incentive for price to come and fill, thereby tagging your trade. Liquidity build-up is another one. So this is the liquidity or the incentive for entry in the case of this particular trade. Incentive for entry. So that gives me the confidence that price will come there, thereby picking my trade up. This line here, I've marked it before this trade played out. My students who are in class, they see my setups that I'm thinking of taking. This is the liquidity for price to come and take after picking me up. So this is the second incentive for price. This is the incentive for target. You guys understand what I'm saying? Feel free to, I'd appreciate you guys, dropping comments as this class is going on. That is how I get to know that, people are actually in class and they're understanding what I'm saying. So just to be double sure, can you guys still hear me clearly? That's number one. Secondly, is what I'm explaining, is it clear enough to you guys? Or is there any part you don't understand? Feel free to, drop it in the chat for me to see, so that if I need to rewind, I rewind, quickly. So this is the incentive for exit or for target for TP. It is always liquidity. That is what price is looking for every time. And then I was telling you guys that I have a video where I was explaining internal range liquidity and external range liquidity. So how do you pick internal and external? You must first mark out your range. For this is the price range, this is the trading range rather. All right. So anything within this range is internal range liquidity. Within internal, inside of the range. Liquidity outside this is the external one. So this liquidity that you see built up here is within the range, of course, as you can see, is inside the range. So that is the internal range liquidity. And as soon as price picks it up and has taken it, next thing is to go and take the liquidity that is outside the range. External range, internal to external. Extremely important. So you want to see the incentive for price to come to your entry. You also want to see the incentive for price to go to your target. And that incentive sometimes is what is not there. When price picks your entry, turns back, and is going towards your target, but it does not get there, it turns back. There is no incentive there. If the incentive is there, price will definitely hit it. You can be very sure of that. Price will hit it. And that is what you see here, as simple as possible. Now, GBP is meant to continue to drop to take this place out again, except, I'm going to repeat that, except what price hit here is strong enough to reverse the trend. If not, we continue to take things out. It's as simple as that. You just keep following the range, except you have hit a zone that is capable enough of turning price back. Except that. If not, we just keep continuing with the sell. All right. So We have looked at direction, we have looked at incentive, and we said there are two incentives. One is incentive for price to come and pick your entry. The second is the incentive for price to hit your target. Another thing that you want to see in your setup for you to believe that it's a solid setup, and I really believe that this is solid, is time and price. Time and price. You see, if you're a trader or as a trader, it is extremely important for you to know how time and price works. This market is funny, but if you understand how sessions work, that is, the market opens for the day somewhere around Asia, yeah, Tokyo, Sydney, Melbourne, all those places in Australia, and that is the Asian session because that is around the time that they are awake and their banks are open. And then the next session is usually your London session, which is Europe, and that is around the time that the actual big smart money companies are trading. And then the next session is your New York session. If you understand that timing, you understand the importance of time and price. Very important. You will understand the importance of time and price. So for me, I use time and price a lot. I use time and price a lot. Sometimes a trade will enter into my entry. That is the exact place where I want to enter the trade, but I'm not entering at that time. I'm just waiting for time and price because that is when a solid move will happen. Have you ever entered a trade and price is just playing on a spot? That is because that asset is not yet a good session for a serious move. So you really get frustrated. Time and price is very, very important. We can open any chart and you see that time and price is key for you to catch solid moves. At the beginning of this session, I showed you guys this particular time and price, and we saw together, the solid moves usually will start either London Open or New York Open. And if you look well, you are seeing it on my chart right now. Meanwhile, this is if you need this indicator, ICTQ zones, sessions, and indices. Just look for it on your indicators. It's there. It's a free indicator. And you see that this move, this candle entered here at 10:15, which is around the time that London Open is just planning to close. It's still London Open, right? Just when London Open is turning to an end, is when big moves usually would start. And as you can see, the same London Open is what what price entered around here. So there's a good chance that this is another drop. There's a good chance that this is another drop. Let's leave Euro USD. Let's leave GBP and go to Euro USD. I showed you guys when we started this call too that this is another move. Solid moves will happen at the right time. There are no two ways about it. Solid moves will start at very key times in the market. You might be surprised, but this move started at 2:45. Yeah. Okay, 2 p.m. 2 p.m. If you're somebody who follows time and price, you know that 2 p.m. is an important time in the market. Why? That is around the time that the market is opening in US. And if you ever go online to look for the list of smart money companies, that is the big banks that trade them millions. Yeah, you realize that about 70% of those companies are in the US. So that is around the time that they are starting their work for the day. That is when solid volume is entering the market. I've not checked all of these things, but I know how the market works. Let me bring my volume indicator. Can you see that that is the exact time that a heavy volume entered this market? There is no magic about the market. You see, right before your eyes, I confidently brought out my volume indicator, and you see that that is when the solid volume entered the market. Now, for those of you that joined this session early, you saw that I was telling you guys that I happened to enter this trade way too early, just a bit too early, something around here or thereabouts. If you look at where I entered now, can you see that this volume is just regular? The volume is regular. You want to catch market when there's good volume, it will just keep flying in the direction you entered. No stress. There's no secret about this market. And this is why recently I was telling you guys that if you really want to learn how to trade, get into a mentorship. There are no magics about it. I'll show you exactly what works. And at the end of the day, you don't need to win 10 trades out of 10. You don't need to win 9 trades. You don't even need to win 8 trades. With just 5 wins out of 10 and a solid risk to reward. Earlier this week, I was showing my students how that our minimum risk to reward in this mentorship is going to be 1 to 5. Minimum. And they keep seeing it that when I show them wins 1 to 10, 1 to 12, 1 to 15, this is a 1 to 12.7, that's 13. There are no big deal about it. So I was telling you guys when we started this class that solid volumes will come at the right time. Can you also see that see big volume? This chart here is showing you the volume. See volume at exactly around 2 p.m., 2:45, 3 p.m. If you look here too, which I was telling you guys that a major move also started around here. Can you see the volume again? There is no magic in the market. It is all about knowing how the market really moves. You want to trade around the time that the real big banks of the world are entering the market. Time and price is extremely important for you as a trader. Extremely important. I'm going to take that again. Extremely important. This is the reason why you see that price will take you out and now go where you want it to go. You didn't enter at the correct time. So that is the third thing you want to see in a trade. I just showed you time and price on GJ. I showed you time and price on EU. Let's look at time and price on any other pair. US 30. There are no two ways about it. It is the same market. Okay, this is not the indicator I wanted. Yeah. So let's look at it. Where did this solid move start? Let's check the time together. This sell started around here. And you can see it is 4 p.m. What is 4 p.m.? Just the tail end of New York Open. That is around the time that New York is opening and London is trying to close. You must understand your market. You must know how the market works. I keep telling my students, this analysis that you do on the chart where you are drawing lines and all those things is just 20% of the market. There's a lot to know. There's a lot to know. If you understand how price moves, you should be looking for a trade somewhere around here. You should be looking for a trade somewhere around here. If you know how price really moves, you should be looking for a trade somewhere around here. And the way I trade is, it's not difficult. Just see what you need to see and mark it out, set an alert. And as soon as price hits there, I'm waiting for confirmation. What is the confirmation? That price came there at the right time. What is the right time? Time and price. A good time for price to move. New York Open, London Open. Those are the best times you want to see price coming into your entry. That is one of the things you want to see. Then confirmation, you want to see price giving you maybe your change of character, your change in trend, and all of those things. You want to see a big volume entering the market. Those are confirmations. And then you can take your trade. So the fact that I marked it out now, just merely looking at this chart, I'm telling you that if you know how price moves, you should be looking for a trade somewhere around here. Now, I studied the market enough to also know that, you see, we're on a live class and I'm telling you guys, I've studied the market enough to also know that somewhere around here, right? Somewhere around here, price is going to give you a little move. All right, somewhere around here, price is going to give you a little, somewhere around here, price is going to hit it and give you a little drop. But I keep telling you guys that there is logic to this market. This place was mitigated. You must know how price behaves. This is another mitigation. And then that same place was mitigated. Yeah. So I'm showing you how the order here has been transferred here. The order here has been transferred here. The order here has been transferred here. That order was again transferred into this zone. So with that, I know that there is a good order. This order has moved over to this place. So I know that there is a good order somewhere around here. So all I need to do next is just wait for price to hit it. If it gives me the confirmation, that means that order is still there. And then I can take the trade and short. If not, I let it do its thing. There is no magic in this market. You just need to understand the market you are trading. There are a good number of traders who have been trading for many years. Ask them what is spread. They don't know, they can't explain. How does commission work? The price you are seeing on your chart, how does it work? What is this volume we are saying? What does it really mean? They don't know. Yet they expect that they are going to be profitable. You need to understand your market. You really, really need to understand the market. So for me, I know that a little move will happen around here, but I'm expecting that a better move should take place somewhere around here. No two ways about it at all. No two ways about it. So we got into all of that when we wanted to see if we can learn anything with time and price on US 30 as well. And I was showing you guys that this is a move happened at New York. New York. Good move, could have a very solid move there. And then another solid move now started somewhere around your London was just closing. You see, time and price all the time. All the time. Look at this move again. Look at this very sweet, solid move. Time and price. 4:30. When London is just about closing. That is the intersection of London and New York session. Time and price. So you need to know that you don't just get into trades randomly. You should be interested in what time is price coming to pick my trade. Very, very important. So like I told you guys, the aim of this session is important elements you want to see for you to know that, oh, I'm taking a good trade. Okay? And we have looked at the main three important elements that I always consider before I say that, oh, I have a trade, I want to take a trade. These are the main three elements I look out for. Yeah. And I've explained them. So going forward, I want to believe that you guys will begin to see how you can apply, price direction, incentive for price to come to your entry, and for price to, hit your target, and then time and price. Now, time and price is a very big thing. There was a time in my trading journey that I discovered that I usually win my trades on Friday. So I started looking into why. Discover that it is a basic principle of time and price. Let me find something I can use to explain. Let's use gold. Let's use gold. Let's use gold. Let's use gold. Beautiful price action on gold. Beautiful, beautiful, beautiful price action. All right. So bring out your time and price. Let's say you're on 1 hour time frame so that the whole thing will be simpler. Things I do as a trader is I look at volume profile. No, as volume. I meant weekly profile. By Friday, you can tell what price intended to do for that week already. It should not be too difficult. How do I do that? I've studied weekly profile to understand that if this happens on Monday and Tuesday, and this happens on Tuesday and Wednesday, most likely this is what's going to happen on Friday. It's just time and price. What is the time there? The day of the week. So let's look at this week together. This is Wednesday, this is Tuesday, and this is Monday. See what price did. This is the Monday of this week. 1, 2, 3. Yeah, this is the Monday of this week. So let's see what price is basically printing for this week. On Monday, price bought. Yeah, price go on Monday till you can say Tuesday morning. From Tuesday morning, price gave us the high of the week, the highest point for that week, and it kept dropping. And now today is Friday. Most of the times when you see this happen, trust me, your Friday is just for reversal. Why? Because every candle must have a week. 90% of the candle you see on the chart will have a week. Yeah, so if all you see price doing for the week is just going down, going down, going down, going down, and today is already Friday, of course, you know that price has to stop and now withdraw back up so that that lowest point can now be the low of the week. So price is basically going to do today, most likely, is for us to produce the wick of this candle. WICK. And as you can see, something like that has even started already. Let me see. Let's go to the weekly chart if we can get it. Uh, see, we're printing the week already. Price went up on a Monday and started dropping, giving us the upper week. So for Friday, price has given us the final drop. Then, well, what we want to do today is just to create the lower week. It's not as difficult as that. So there are many ways you use your time and price. There are several ways to use your time and price. I just showed you another one, weekly profile. So for today, there's a good chance that all that is just really going to do is retrace into this range. If you know how ranges work, you know that we have this is the current trading range. Yeah, if you know how trade ranges work, you know that this is the range. And the next thing we want to really see price do is retrace into this range. And somehow you should be looking for another trade because this mitigation. So price really struggled there. Somewhere around here, you should probably be looking for another sell somewhere around here. And it may not happen today, but at least price should be retracing into this area. So if you're able to get into an entry for you to follow it, and we can even look at it together. If there's an entry there, look at it together. Uh, okay, not seeing any clear entry yet. If there is, I would have thought of you can take an entry. I will take out this liquidity. That will be the incentive for price to go up. There's a liquidity build up somewhere around here. Yeah. So incentive for price to come all the way. There are, fair value gaps for price to come and fill and all that. So guys, that brings us to the end of this live session. Hopefully, we'll get on many more live sessions and you guys can ask more questions. But just before we end this one, if you have any question, feel free to send it to the chat box now. Yeah, thank you so much, AKP. Thank you so much. I saw your text. It said big thanks. This is an expensive knowledge we just dished out. Thank you so much. If you have any questions, please send it to the chat. I'm very much on the chat now, trying to get any questions you might have so that we can answer it quickly before we go. Also, feel free to drop your likes. Feel free to tell me if you enjoyed the sessions. If you don't have any question, tell me if you enjoyed the session. Tell us how we can, enjoy the session better next time so that, you know, the whole thing is more interactive and enjoyable for all of us. I'm waiting for your questions and for your notes, for your texts. And if there are none, feel free to also tell me that there are none so that we can close the session for today for us to meet at another time. Yeah. Adebola, thank you for your text. Okay, so someone says, AKP, what if we missed an entry? What should be a good trader's next line of action? Okay, so one of the things that I've been dealing with in my mentorship this last week is helping my students see forex the way they ought to. All right, and one of the things they've been seeing this week is how that there is a trading plan behind a trader. You see, for people who see me on Twitter, on WhatsApp, all you see is how I cut a trade, right? For people who see my status, you see last week I had three positions on EU, everything adding up to around 1 to 36 used to reward. These things are real, they are live. However, you don't see the behind the scene. Behind the scene is the trading plan, the discipline, what you have told yourself you will do and what you will not do. So it all depends on your trading plan. For you, when you miss an entry, what have you discovered that is best for you to do? So let me answer the question personally. If I miss an entry, it's okay. And I keep telling people, you see, if you see demo traders online, they will tell you SL is better than missed entry. It's a lie. Oh. If you see anybody who say that to you, don't mind them. It's demo accounts they are trading. That's why SL can be better for them than missed entry. I would rather miss an entry than try to chase price, right? And now hit a stop loss. So if you have a place marked out, for example, something like that happened to me this week. Let me show you on my chart. Although I'm not sure it's still there, I must have cleared it. My students are in this class, so they can bear testimony to it. Yeah. So this is EU, and I marked out this place somewhere like I think it was somewhere around here. I marked somewhere like this out. I just wanted price to hit it, notify me, and I'll come and take a buy. As you can see, very unfortunately, price only got very close to that place and turned back. What did I do? I left it. Yes, I left it. That's what you do. You leave it. The only thing you can do again, and this requires additional skill. If you are a person who just started trading, you just, this thing that you just mark out on another block and that's all you do. You may not be able to catch this, but if you're somebody who has been studying well, you will notice that when price picks up an entry, usually there are additional entries along the line. The question will now be if you know how to catch it. So take for example what just happened here. So price got close to my line here and started the move. If you know how to catch continuations, you can catch this one. Yes, we missed this one, but you could have caught this one. For me, I was not even on the chart. Like I told you guys, the way I trade is I mark where I'm interested. So when price hits it, I get a notification on my phone. That's when I come to the chart. I'm not sitting with the chart 247. No, I'm not. So, but if you were on the chart and you missed this entry, you would have gotten into this continuation. If you miss that, you could have gotten into this one. That is if and only if you know how to follow price. And this takes proper skill. And that's basically what I use for this continuation. So price has started the sell here. I didn't get in here, I didn't get in, I didn't get in here. But I mean, if you know how to follow price, you could get in on this place. You could get in somewhere around here. By the way, that was not the block. The other block is I have a unique way I pick my entries. And I like to tell people that I only teach that to my students. As you can see, somewhere around here I picked the entry from, and that is exactly where price came and gave the drop. So it is all about if you know how to follow price. You just need to know how to follow the price. If you do, then missed entry will not be there for you. When you miss an entry, you can get into continuations. And let's look at GJ. You realize it's there, it's always there. Look at price selling. Price started the sell here. If you know how to follow price and you miss this, you can get into this. If you miss this, you can get into this. If you miss this, you can get into this. miss this, you can get into this. It is what it is. You just need to know how this thing works. And what how you get into that is you need to study the market a lot. You need to study a lot. You need to study properly. All right, so another question. What tool did you use in marking out sessions? I mean the London and New York session that I saw on the chart earlier. Um, okay, so that it's a free indicator. Yeah, so it's available for everybody. And this is it. The name of the indicator is ICTQ zones, sessions, and indices. So if you, I mean, basically how you get to indicator, you come to your indicator tab here, and then you search. For me, I've added it to my favorite, so I can always pick it whenever I need it. But for you, it will not be on the list, so you just look for it. ICT, ICTQ zones. So you see many indicators that have that name. So you just want to look for the specific one that you are looking for, which I've told you the name, ICTQ zone, whatever, 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 whatever. So you just look for it on the list and then add it. How do you add it? You just click on it, it will get to your chart. Or you make it a favorite so that you don't need to go and be looking for it next time. It's already on your list. So this is it for me, and that's the indicator. Okay, those are the two questions we have. Are there any other questions, or we can run away? How do you set your notification? Okay, let's quickly set an alert. Um, so on US 30, yeah, I told you guys that based on just looking at this price action, I would have been looking for something around here. I'll be looking for a confirmation somewhere around here, yeah. So what you just do is you bring your mouse to where you want to set the alert, and you right click. Part of the option that comes up is add alert on US 30 at. So you just tap it and you do create. So you see this line now, broken line. It indicates that I've set an alert. So the next time price hits that line, I'll get a notification on my phone. Why? The account that is signed into TradingView here is also signed in through my TradingView app on my phone, so they can communicate. So as soon as price hits it, I get an alert. 100%, I get an alert. So that's basically how to set an alert. Another way you can set an alert is if I want an alert here now, you can drag a line there, and then you see when you draw a tool on TradingView, this thing will usually come up where you can make changes, setting, lock it. But if you click this, you add an alert on that line. So when price hits that line, you get a notification. But I don't need that, so I can delete it, and it will be asking me, this drone is used as in an alert. If you remove it, you have removed the alert. So I say yes, because I know I don't actually have any reason why I want to do anything at that point. So that's how you set an alert. Um, all right, I guess those are the main questions we have for today. Thank you guys for joining this session. Subsequently, we'll do other live sessions, and we'll have other interesting times together. Take care, and live stream. And you no longer do that, yeah.